Very warm welcome, everyone. So, let's get started. So today we're going to talk about 8 trends that we believe gonna reshape the fintech landscape in year 2019. So in today's agenda, we're going to cover primarily. We'll start with what is fintech. We'll go with why it actually matters to all of us, and why we should be here today attending this seminar. Then we'll talk about the specific trends which we believe going to make a major impact in the coming year. And by the end of it, we'll have a small Q&A round so that if there are any doubts, we can go through it right away. All right. So well, it's no brainer that FinPart in fintech stands for financial services and tech is for technology. Everybody can easily guess that. But what actually, both of them, when it comes together, what actually means? Uh, they actually mean to design and deliver the financial services through the innovative use of technology. When we say use of technology, somebody generally thinks of technology. Banks were using technology way before the fintech came in the picture. So why we are talking about technology with the fintech only? Banks were actually using tech long before the fintech revolution. Well, actually, yes, they did use the technology, but reasonably. Um, it's around a decade back, let's say around 2007, 2008, banks actually got busy with the rules, regulations, compliances, and they didn't pay much attention to the tech. Interestingly, at the same time, a lot of many game-changing technologies, innovation come up. Smartphones, Apple came, Android devices came up, WhatsApp, Uber, Airbnb. A lot of innovation in the technology industry was happening, uh, and those technology had very enormous impact on our lives. In fact, they change our basic nature of how do you want to interact with services, how do you want to what kind of experience we like to have. The conveniences coming along, and this change of behavior, uh, that was a major shift in the consumers from the consumer's point of view, and they were expecting such services and convenience from the financial industry giants as well. And there was a clear gap, with what we had with traditional bank, or with still actually with traditional banks were offering, and what a normal consumer sees. So fintech today, which is revolutionizing the financial services industry, is actually addressing that gap. So today, a lot of major players, minor players, actually coming up every day and doing a lot of things which revolutionizing the space. It's all about addressing that gap which left void open by the traditional banks. Um, and with the help of technology, these guys are doing it well. Let's move to the next slide, where why it all actually matters. Uh, Interestingly, the gap we just talked about, which fintech wants to address, that was the problem of all the financial giants, traditional banks, financial services, providing providers and all big names. Actually, there were none of the small team then over there. Actually, so these big giants supposed to handle this gap, but they didn't. Instead, many other institutions, decided to join in and jump in actually, and not I would say join in, jump in and address the gap. And these institutions were primarily non-finance technology companies. Um, Paytm is a great example in India. Google Pay, Lending Card, MobiKwik, a lot of technology company, jumped in and started addressing this gap. So, with these company in the financial arena, the landscape started to evolve, and on very unprecedented pace. And they also, pushed for a new banking model where traditional bank, kind of, went back. They just, took a back to management the backend stuff without which a bank cannot withhold. Uh, and these new fintech players actually taken up the front end, customer experiences, convenience. So they all taken up the front end. Uh, they made the customer experience better, much much more convenient, and reasonably, you know, interesting as well. It's fun as well. In fact, if you recently used the Google Pay, it does give you a lot of cash back. You make a transaction, they give you a card, you swipe it. Sometimes you get something back. Sometimes you just but time. So it's kind of fun as well. So they made it interesting, which is good for the younger generation to get involved. Whereas traditional banks stayed in the back. They were dealing with the boring stuff, regularities, compliances, uh, you know, reportings, and all that kind of stuff. Which, in my humble opinion, uh, a fintech player is not never going to take up actually. Uh, Point is very simple. Fintech player is not a bank. They have a choice to choose from what is available in the financial arena. Choose the interesting part. Choose the part which will going to benefit more, which is going to give better profit. Bank does not. They have to comply by rules. They have to follow the compliances, regulatories. So uh, so there's very interesting thing happening in the financial landscape. Whether banks want it or fintech players want it or not, uh, banks has to. Hello, is it audible? There's a slight noise in the line.
Yeah, actually, could you just speak up a little bit, please?
Sorry, please come again.
Mish, your voice is not all that clear. Could you please speak up a little?
Sorry, let me be a little louder here. Okay, so we're saying financial landscape is actually evolving. So banks should be going, taking the back seat and managing the back end, and fintechs are actually taking care of front end, leveraging the customer experience and the convenience. you know but why so actually, maybe bankers should ask why this unfair segregation of work or sectors. Think of last innovation which actually came from bank. Just try to think. Well, if I think and I put a thought, it was the last innovation, the actual innovation which was from bank, was an ATM, and which is like ages ago. Since ATM, traditional banks didn't innovate. They tried to put all their focuses to probably reduce the branches, cut down cost, focusing more on regulatories, compliances, avoid more little fine and all. So bank really stopped right there. Since ATMs, there were no innovations from the bank, but bank must have evolved, and they will actually. So some of them will actually succeed, but many will not. um, there was interesting statement I was reading, I guess 2 weeks ago. uh, so they were saying there is an estimated 30% banking job loss in the coming 10 years. Actually, the banks, 30% banking jobs will disappear, uh, which is a quite huge number. uh, but that's the truth. So, but it's not like that. All the job will go away. Actually, so few new jobs will be created, uh, but they're going to be very different. Will demand a completely different skill set. Uh, a traditional banker uh, would find it very difficult actually, unless they understand tech and has a creative thinking to use them to leverage the consumer experience. So it does matter actually, uh, not just to the financial institutions, the traditional banks, but an individual too, who is in the middle of all this, especially the one who are on the banking side at the moment, because fintech is primarily all about technology leveraging financial services. So anyone with the banking knowledge has to evolve and learn technology side also, design side also, so that they can grow along. So it matters to both industry and the people working in industry. Having said that, let's move to the next sections. Section where we're going to cover 8 trends which we believe gonna make an impact in the coming year 2019. So today we're going to talk about open banking, blockchain, ML stands for machine learning, then lending. We'll specifically talk about P2P lending. Then RPA stands for robot process automation. Then personalization, cloud computing, and security in fintech. All right. So, okay. Open banking is actually all about sharing, sharing the information or the data available with multiple financial institutions or service providers through a robust system efficiently. So what exactly that means? Let me give you a good example. Actually, UPI in India, UPI Unified Payment Services. I'm sure almost all of you have heard of it, or most of you have used it. It's a very interesting example of open banking. UPI, it's just we come up with a strong background from NPCI. NPCI is basically National Payment Corporation of India, who manage all the payment related financial infrastructure in the country. Services such as NFT, RTGs came from them. So they built the UPI, and what they did, they built this enormous system where they have managed to bring almost all the major banks under one umbrella. So one common platform where you can access your accounts through one app enabled by UPI. So initially they came up with their own app, which Beam. I hope many of you use it, and they allowed you to add your account with different banks on this app and use it. Later, what they did, they opened up the system to other providers as well. So now UPI is available through Paytm also. It's available through Google Pay also. Uh, there are other players who's taking it up further. So what they did, they built a system. They brought all the major players so they can share the information. Uh, they made it robust, efficient, and then opened it for all the players. What was the end result? End result, it's very convenient for a customer actually now. If I have two bank accounts or three bank accounts, obviously with different banks, I just have to open one app. Uh, I can quickly see what my balances are, in these three bank accounts, and I can choose from there, which bank or which account I would like to use to make a current payment or a transfer. So it's a delightful experience for a customer. I use UPI very often, and it's really a bliss. Um, so it's not just application like UPI, it represents open banking actually. Open banking is all about all the players who are involved, opening up their services, information and data they withheld uh, through the technology. If you come across the term API, application programming interface, that's the base behind open banking most of days, and that's the traditional definition. So, so they open up the system. There's one single door out uh, to the consumer, and everybody goes through it. So it makes easier for consumer to compare, see what kind of service each bank is offering, so they can easily compare the services. Um, I believe this is going to go bigger in next year. So you're not just able to compare services in basic services. You probably will be able to compare um, other from the other end of spectrum actually, which the banks offer. So there will be a easier comparison of all kind of services, not just banking, probably investment, wealth, maybe insurance. Uh, so I believe all the whole spectrum gonna be available through open banking to the consumer. They will be able to compare those services. Obviously, that would promote competition. I hope it to be healthy because it's fair. Um, Also, interestingly, it's not just the consumer which gets benefit, who gets benefited of the open banking. Uh, is the financial institution as well, because through uh, this whole architecture, this structure, where people with the multiple banks are sharing data, and there's one consumer who's getting it all. Uh, this bank's also getting something back in return. They get to know the financial condition of the consumer. They can easily figure out uh, what's the financial behavior of the consumer. How do we use his money? How where he buy, what he buy, the quantity, quality of stuff. He invest in a phone which costs let's say 80,000, or you buy a phone which costs 10,000. Other services, what kind of restaurants he goes, what kind of food he buy. So a lot of data actually of which belongs to consumer will be available to the financial institutions as well. So if next time this consumer goes to a bank and apply for a loan, bank has a better view uh, of the consumer's finances, behavior, and usage pattern, and based on that, they can you know they can easily create a credit risk portfolio, and determine the risk level actually and ability to repay, and can offer a customized loan solution to them. uh, let's move a little further. We talked about individual, then a bank, and it's going to benefit small businesses as well, because those are the ones who sometimes stuck in the middle actually. As an individual, they can't uh, get a loan, and they are not a big business, so it's not easy for them. So for small businesses, it will be easy to be assessed for business loan or a credit line, if they are using such mode of for transaction or payments. Not just that, this will also help them to keep in bookkeeping and accounting. So it's like everybody who's involved going to get benefited. So I believe the saying sharing is caring is somehow is going to be true here. So um, so it's not just okay. These are the just specifics we just talk about. So general banking open banking is all about uh, you know how much data you can share, and you can use it in many ways actually. Let's move to the next topic, which is blockchain. In a way, blockchain also power open banking. So what blockchain is actually? I'm sure you all of you must have heard of Bitcoin, and uh, oftenly blockchain was, or still actually is, misunderstood as Bitcoin. Well, it does relate it, but it's not a Bitcoin actually. Bitcoin is a cryptocurrency powered by the blockchain. Blockchain has much higher potential, and thankfully it's not in the dust like Bitcoin today is. So let me point out something clearly here. Okay, let's just go back a little in history actually. Uh, so banks were originated around 1300 or 1400 century. The concept was pretty simple. It's all about keeping the money in the vault and maintaining records of that money, to who it belongs. Uh, so they had to have a ledger. So all the banks had their own ledger, and every time transaction happened, they used to keep a record. Then came the checks and drafts. So the consumer or the account holder can transfer money from one bank to another bank, from one consumer to another consumer, so that which could belong to other bank also. Uh, so now there has to be a system to devise where you know because each bank were doing making entries in their own ledger, so all these entries needs to be synced up. So there were multiple ledgers, there were intermediaries, um, there were multiple entries for single transaction, uh, and the reconciliation process. Uh, so a lot of effort and work was used to happen, still happens actually, to maintain a single transaction, to keep a record of single transaction. And all this work, all this processes make it really slow, and it does cost. And at the end of the day, it's the consumer who actually pays. Um, Interestingly, it hasn't changed much even today. It's pretty much same. We do today actually. Um, but with blockchain, we have potential to change this. Blockchain is talk about decentralizing stuff. It says you don't have to keep multiple ledgers at different places. Just keep one, where for a transaction there will be only one entry, and everybody who's involved has to verify. This verification creates a block for this transaction, which is immutable and linked to the past block, so that cannot be tempered with. And so it does it, in a way, it asks for you to do something extra, get involved and verify it all the time. But it does save you from maintaining your own ledger, reconciliation. Uh, so that's a lot of saving actually in terms of process, in terms of time, also costing. Uh, so it does, you know, improve this process. And it was interesting to see that blockchain, which is powering up open banking, uh, goes by the same principle of sharing actually. So as we go through these trends, you will actually figure out all of them, almost all of them are linked through, linked in some manner actually. So that uh, blockchain here is about opening up system, um, getting involved. Open banking is about opening up the system and sharing. So they are linked. If I go ahead further, this okay, go ahead. This is machine learning. We're gonna talk about now, and previous two topics also are linked with it pretty much. Let's first talk about what is machine learning. Okay, machine learning is actually a branch of artificial intelligence. Uh, okay, often ML and AIs, used interchangeably, but they are not. Artificial intelligence has been, existed for very long, and ML is pretty new. Um, so how ML is different from AI? Uh, it's a sophisticated version, or less sophisticated level enhancement to existing AI um, available, to us. ML basically about machine learning. Machine learning, basically the machine's learning by its own. So ML enables computers to learn without being explicitly programmed. The earlier idea of AI was, to tell the computer what to do. So there were, a set of written rules or directions. If and then else, then kind of structure actually. So humans used to define, if the situation is like this, then do this. Otherwise, do this and do that. Uh, so what was the problem? If there is something, okay, how do we learn? We learn from our surroundings. A lot of information which we get through, from the when we were children. We used to, grab the information from all around and so on, as from the school, the college, the workplace around, the community around. So we gather information all the time, and that's how we learn. uh, there were instances when people came and tell us, if this is the case, then do this, otherwise do this. But most of the time, we were learning by our own as well. So on the same principle, ML stands. So it's about building up algorithms, mathematical models, and providing this big set of data, information available to these algos and the models, so that machine can learn what actually happened in past, or in this data. They can make a pattern. Um, as soon as the rich the data is, better the model will be. As the good school was, the better our knowledge is. The similar manner, ML will evolve with the better data and the algorithms used and statistical model used to learn from it. Uh, and you don't have to program it explicitly. You provide it, keep on providing the data, the new data which is coming across, and it keeps on learning from it. So it's a very sophisticated approach than the traditional rule-based technologies actually, which AI relied for very long. Uh, I'm going to read out the 4 points on the right on the slide. Actually, I don't want to. I would like to keep it just as it is, because that is the specialty of ML. If you're in a business, how it's going to uh, help you, how it's going to be, make the difference. So the first point says, it will detect the changes in the data pattern and tune the model by itself. It doesn't need any external intervention. So that means you don't need a data scientist, who basically take the data and formalize it, make the model better or tune it and then give it to the machine. So the machine would do it by itself because it has ML based algorithms and the earlier model which allows him to go through the patterns. Second is when the data quality is not perfect. So we live in an imperfect world actually. So nothing is perfect here. The data machine gonna get is also not be perfect. Um, and in a traditional environment, incorrect formatted data or incorrect data will result, a negative output, thus impacting the business. But ML has the ability to understand even imperfect data based on its experiences of the past data, and it can still create a meaningful insight out of it, so that businesses won't stop. They can still take a decision, and continuity remains. Third says, okay, that is interesting because in traditional ways, we have to store the data. I'm sure you must heard of big data. It's still a prevalent technology and being used. So the data needs to be stored. It needs to be properly processed and transformed into format, or where it can be used by analytic engine or for analysis or other form of processing. uh, with ML, you don't really have to worry about processing or transformation of data in a particular format. You can simply stream the data through the ML's the neural engine, the core, uh, and this engine in the real time can pick up the data, build up the pattern, and provide the output. So that the time which actually goes on into the processing the data and transforming it and then giving it to actually a machine to make sense out of it is saved. And the last one is very important. It says um, it can handle unstructured data. What does that mean? Okay, data is not just the text actually, in a text file or an Excel or something. It could be the voices. What I'm speaking is kind of data. What I see is kind of data. What I hear is kind of data. So and it's very hard to structure this kind of data actually. So it's because there are so many parameters, and it's almost all the time variable. But ML has ability to handle this unstructured data and put algorithms in place and use it to for the purposes. So two good examples are image recognition and voice recognition, uh, which is started being used in the industry now. So one of the application of ML which is being used by the fintech. Uh, so now for the KYC, you don't have to actually submit your passport size photograph and probably self-signed or attested. You just have to take a selfie. Let's say if you're doing through a smartphone, um, take a picture of your photo identity proof and let the ML do its job. So what ML will do, it will process your selfie, it will process your photo identity proof, it will do the image recognition and match and see both are the same person. So part of KYC through the service can be done easily, and there are the photo recognition, photo identity proof match with the photo given done through the image recognition. The rest of the stuff is pretty easy. Um, Chatbots are a good example. Uh, Earlier, there were simple rule-based chat bots, uh, where if you type something, there was specific responses corresponding to the questions. So they're going to provide with that. But now with ML, uh, chatbots have become sophisticated. They understand um, the user's behavior, intentions. Uh, um, they anticipate or predict actually what could be the next question could coming from the user, and based on that they do a lot of processing, and based on that they make a behavioral profile of the user, and does respond in a better and sophisticated manner. um, Fraud detection, uh, well that's one of the area which have taken leaps actually in last 15 months, to be honest. Earlier fraud detection systems were rule based. There were simple rules defined by humans. If there's a situation like this, do this. If there's a situation like B, then do this. So as much as you can think of, uh, generally coming from the business analysis, or the previous experiences of bank, or the fraud experiences of the banks, um, based on that, static rules were defined and given to the system, and system were using them to detect the fraud. Um, but there's a very interesting saying. There are things that you know. There are things that you know that you don't know, and then comes there are things that you don't know that you don't know. So it's very interesting. Yeah. So somehow it falls apt to this case. So in fraud detection scenarios, also, for rule based at least, there are things that banks know that they know, and there are things that they know that they don't know. But the third case, when we don't know that what we don't know, comes out as a surprise one day, and a big fraud pop up, and bank has to be at a loss. So uh, ML come as a savior there. It learns from the data fast. It predicts the what kind of fraud might occur, can happen. It uses all the information from the transaction amount, frequency, age, location, uh, um, and based on that, it make a better and robust fraud detection system. A futuristic robust fraud detection system. Okay. Let's move to next slide. Okay, lending. Well, we all know lending is ages old tradition. Typically, one needs to go to someone who has the things he need in abundance, and ask for it. Um Later, people started to ask for the money only, because with money you can buy all other stuff. Banks come in the picture. They formalized it, and now people started to going to bank for the loan. Um, Although there was, there still is a informal parallel system, which provide loans to the banks. Um, but that is mostly unstructured, not regulated. Some systems like chit funds, and people often get cheated. Uh, but still, both structure and system exist here. Um, okay, the protect from frauds, but doesn't cover the need of all actually, because sometimes you go to bank, but it's bank's discretion to provide or reject. Uh, Interestingly, there's at the same time, bank has a consumer who wants to deposit some money in the bank, but not happy with the return getting on it. Uh, so in this particular scenario, we're going to talk about P2P lending here, peer-to-peer lending. So peer-to-peer lending is all about connecting these two individuals in an environment where they can leverage, each other's strong points and experiences better than what traditional bank is offering. Such platforms, basically crowd lending or lending P2P lending platforms, generally allows one who has money to lend and other who want to borrow it to connect based on the information available and loan requirement, users detail. So these platform basically prepare a creditworthiness rank or a risk portfolio and facilitate loans. They also put another lot of algorithms to determine what kind of interest rate they should be charging. What kind of and interestingly, there could be one or more lenders get involved on the for the same transaction, and they can share part of money they lent out. So it's very interesting. Uh, Lenders get better return out of it than traditional bank, and the borrower gets the money which actually wasn't able to get to the bank. Some of the good examples are Faircent, Lending Card. You must check them. You might want to invest something. So let me quickly move to the next slide. RPA. RPA basically stands for robotic process automation. Everybody understands automation nowadays. It's all about uh, doing stuff better, actually automating something, the mundane task or repetitive task. Automate them so that buy the software or buy the tools so that they can be done in a better and proper manner. Robotic process automation is next step to the automation, actually. It's like a virtual workforce of software robots. Uh, in the similar manner, they carry out repetitive tasks and mundane processes. They undertake all of them. It does get better with the use of latest tech. For example, OCR, which is optical code recognition. So if you give them a form, they can read out and convert it to text, and they can understand what exactly it means from an image or a printed document. They use machine learning. um, they understand because of machine learning, they understand regulatory better, so they easily follow regulatory compliances while making undertaking a task. um, all the KYC or anti-money laundering processes, they are easily taken care of by them. And interestingly, they work 24 into 7, unlike human. So they produce more work in less cost. uh, the turnaround time is much better. The accuracy is much better than what we actually managed to get out of it. Um, Interestingly, the cost which belongs to RPA is of the initial setup. Actually, once you manage to have automation process setup, um, it operates at 100% quality rate, actually. So there are no room for the errors. So once you manage to have this in place, you can say bye bye to the errors and quality issues. There's one interesting quote I come across. I put it down in the slide. It's very thoughtful, actually, and thought provoking as well. If you're not using RPA, then as a business leader, you have lost the competitive advantage. And as an employee, your job is just done like that. Let's move to the next slide. Personalization. Okay. Among in the talks of all this fintech trends, technology, services, solutions coming up, is the user who is in the middle of it. It's all about the consumer, the user, the end user, and the customer in at the end, actually. And because it all started from the consumer's expectation of the services and convenience. If you remember from the first, in the second slide, we talked about how technology evolved and asked, gave us the taste of the convenience and what the better experience actually. So it's all about the seeking that experience and the convenience. So personalization is next step to that. Uh, it's all about treating as individual, being treated as an individual, not as a broad demographic segment, and being serviced in a similar manner. So a customer wants to be treated in a manner they are different from the other customer, not to be a fixed predefined package to be given to somebody. Doesn't matter it fits to them or not. uh, so today's technology actually provide all these options. Because a lot of things, everybody has a smart device. They'll make a lot of transactions and do a lot of things through these smart devices. So a lot of data about every individual is available. uh, you know we come across all the shopping habits, sales, uh, and everything happening around actually. So all this data actually helps to predict uh, what kind of behavior uh, the consumer has, what kind of preferences they has, what actually they need, and all of stuff actually. So based on this data, you can a bank can basically provide offerings which is more relevant to the user. So they can predict the personal finances and advise accordingly. They can provide custom loans as per the user's need and the engagements, and so on. Today's technology, as we saying, does give this capability to build such models, and that too in real time. More more in context, uh, and thus making consumers experience better. Okay. Although in last 2 years, cloud has picked the pace actually. But there's a lot more, in coming year actually. All this technology which we talked about, which driving the fintech industry, uh, it won't be as efficient if the cloud computing is not in the background. Otherwise, if we're not on the cloud computing, actually, we will lose the edge actually. Why? Uh, Let me simply, okay, the definition is very simple. Cloud computing is about delivering computing services through the internet, which is basically we say cloud. How it differs and how it makes the life better. Simple. It reduces the cost because you use it what you need. Actually, you don't invest heavily in the infrastructure, and let's say infrastructure for 100,000 people or consumers, and then start building from 1,000, 10,000, 20,000. So by the time you reach to the 100,000 um, users, your infrastructure for those number of users is actually left unused, but you're still paying for it. You made a investment which is not being used. Second, if let's say if you have 10 users, we'll start with this. You'll have infrastructure or services, computing power according to 10 users only. But as you move ahead, as you get more consumer and customer, it's very easy to scale your services. It's very easy to expand. And it's most of the times, pay as you go model, on the demand model. So as you grow, you get more, let's say, space on the cloud. You get more processing power. You get better networking or speed, and you pay it accordingly. So it's a good scenario. It does give you flexibility. You can think of a service and can easily switch it on, based on demographics, based on the consumer segments, based on the locations, and that is to one flick of let's say button. So it's very easy and it's very flexible. It's very agile. You can think of uh, any service, and it's very easy for you to bring that down in the market. It does improve your relationship with the clients because you both of you are on the same level now. Basically, a consumer expects something, and provider is able to provide that in time actually. So it's a good harmonious situation. Uh, and also, so cloud computing is the new generation technology. So all the new generation services are easy to bring, to be enabled them and get them on board. So let's move to the next slide. On the last slide of the trend section, it's the security actually. To if I want to sum it this slide in one statement, that means that would be improved security means wide adoption. If you have a better security, you'll have good number of consumers. So as the fintech industry is going, it's on the it's sorry. Okay, as the fintech industry is going, it's like giving invitations to hackers as well. It's on the crosshair of the the bad guys all the time. So security here is the utmost priority. Interestingly or fortunately, fintech is flexible enough to adapt all different kind of methodologies, security methodologies are available around. Uh, the three which I believe going to be prominent in the 2019 is biometric based, behavioral or algorithmic, and decentralized or transparent banking. Actually, biometric is pretty evident. Nowadays even the smartphone devices coming with a biometric security actually. So more biometric or combination of biometric authentications you have, it's much harder and to break and to make a fraud out there. Behavioral trends, security trend actually, it's about uh, algorithmic tracking actually. It's not even not just our bodies actually, the fingerprints or the iris provide the unique markers, but our behavior does as well. So it just all this data needs to be translated and used to be used as indicated to avoid frauds. Then comes the decentralization. uh, let's think of the blockchain scenario we talked about in few slides back. um, if we have one transparent system where multiple when parties are involved and they together form a immutable block of a transaction, it's everybody's efforts uh, you know gotten into it to making it secure. So it's very difficult, and especially to for an open and transparent system to crack into it actually. It's like reversing all the effort done by those multiple parties, which is very hard for a couple of hackers. uh, so with this, we're finishing up our summary for 8 trends of 2019 in fintech. Um, Also, I was going through Imatka's curriculum on the fintech course actually. Um, Let me just open that as well because it's very sound very interesting to me as well. So maybe I just like to uh, take a minute on this as well, so that if you're going through it, so we can can have a analogy where where we crossed. So I see that there's a fintech primer actually, which talk about all the basics in the fintech industry, financial industry. Then it comes to the what is fintech and why the hype. I believe you guys by now have understood why is the hype. Um, it deep dive into blockchain. It's a technology future, analytics and machine learning. It begin with analytics and then it goes to machine learning, which is the future of AI. Okay, so let me just repeat on this part again. So I was going through this curriculum as well while preparing the trends for 2019 actually, and I does sound does find that most of it actually already being covered here, which is fantastic. We talked about blockchain, analytics and machine learning, then robotic process automation, all being covered here. And on the level 3 you see design thinking and experimental learning. Though we didn't have any slide for this, but if you remember, uh, on the second slide, when we were talking about why it actually matters, uh, and we came up that there will be 30% banking jobs will disappear in next decade actually, and but some gonna create uh, with requirement for different tech, absolutely different skill set. One is the tech understanding, and second was design thinking. The thought process uh, with which you can actually understand the technology and design the solution with the available tech and the consumers expectation. So I believe this level 3 section going to cover a lot of interesting stuff, and probably is going to make you future ready actually. So this is very interesting. Kelvin, can you please scroll down a little more? Uh, okay, I believe that's the last stuff. So that's pretty much from my end. It's been great. I think we can open for Q&A now.
Yeah, hi, this is Joy over here. Calvin's also around. I'd just like to quickly introduce myself. I run the online business at Emarticus Learning, and I'm also like the program manager for like the fintech program that we have. If there are any Q&As with regards to this webinar or in general about the program, I'll be the right person to address those questions too. Uh, so just keeping that in mind, if there are any questions from any of you, we'll be happy to go take them on at this point of time. Okay, so I have a question coming in from Akansh Kothari, who says that in the field of investment banking and portfolio management, which particular fintech software or technology should we learn, or what do you recommend? So I'll spend about a couple of minutes on this point. I think we have about five, five, 5 to 7 minutes to maybe take on some more questions. So I think 3, 4 questions is good. So for this question, right, particularly Akansh, uh, in fintech, right, particularly the concept of robo advisory is something that we like to talk about. So I think essentially as we talk about like the payments and like the lending ecosystems in India, which are which are in fact just very prevalent. There is quite a lot of noise around payments in particular. I think with like the NEFTs and the IMPSs, maybe of like just yesteryear all the way to now making payments of e-wallets and stuff. In that arena, I think robo advisory is something which has not picked up as much as I guess like the market would have anticipated. But when you talk about portfolio management as a whole, I think that element of how can you go replace that asset allocation mix, which typically RM or an investment manager would do, and how do you use this technology to input the same in like fields such as age or like your risk appetite, and then come up with like a recommendation of that asset allocation mix, which is a hybrid across equity and debt products, is something where we've seen an uptick today. There are quite a few boutique portfolio management like services today that are using this form of technology to come up with an ideal asset allocation, and then do away with the need to actually go add humans to that element. So I guess that is one piece in particular for like portfolio management, where that helps quite a bit. If you have more questions around this, right, Akansh, I'll be happy to go drop you an email address, and maybe you can reach out to us, and we'll be happy to have a conversation with you offline as well. There are quite a few questions, so I'm just going to take them at sample. So again, we have all these names with us, so we will reach out to you separately, and just give you all an answer to your questions as well. Mohita says, what is the cost of this program? So yeah, Mohita, so this program retails for 1 lakh rupees. It is a 4-month program, as I'm sure you've already seen on the website. I'll be happy to drop like a link of the website on the chat window. I think this should go out to all of you. Just a minute. I think Unless I've sent it to the wrong place. Just 1 minute. I've sent this out in the chat box, so you all should get like the URL of this program page. So this is like a 1 lakh rupee program which runs across 4 months, where we conduct these trainings online on platforms like this, and we have trainers coming across like the fintech arena, all the way from blockchain to RPA, as well as from analytics to like the fintech primer that we do with people from the NBFC space. We also have a easy loan or a zero cost EMI option available today, where if any of you feel the need to also go through that route, we have even that option available, where you can pay us down, I think around 20% or 20,000 rupees, and then you move into EMI schedule for the next 6 to 9 months. So in case, I would assume that you all already have like a relationship manager or somebody at Emarticus that you are like, coordinating with. Feel free, to reach out to them, and they'll give you all the options regarding both like the direct payments as well as the EMI routes. Is fintech used only in banking domain or any other domains as well? This is coming from Ashfaq Hussain. So, Ashfaq, as you see nowadays, right, I think quite a few things are moving away from sectors to functions. Now, what I mean by that is analytics, right? Earlier used to be a sector of its own, where you would have to go to a specialist in the industry to actually cater to those kind of solutions, where you would get something on analytics or technology. The same thing today can be used across different sectors, where everywhere where I mean everything from like say real estate to banking and financial services, as well as like the FMCG sector, would need some form of analytics to understand their data better. Which is what I mean by moving away from a sector and it becomes a function like sales or marketing or HR, where across different sectors you will need analytics, or in this case even fintech. So blockchain and all these kind of technologies, they are not only limited to the financial services arena, but they can be used extensively for real estate, for healthcare, for FMCG, for aviation, etc. So I think when you look at like the market behind key technology like blockchain, it is not at all in that sense like limited to just one or two sectors. But if you understand how to run or how to work on the blockchain, you can essentially use that across 4 or 5 different sectors at the same time. Rahul says, I'm not in technologies, I'm into project management, 13 and a half years experience. How is this program helpful to me? Possible for someone like me to upgrade? How about placements? Right, Rahul. So to give you a sense of like the background of each of these batches, our audience has got anywhere between 10 to 12 years of experience at an average. This is the fifth batch that we will be running for fintech, and for each of them we've seen average experience of over 12 years in each of these batches. So I think what you were saying correctly. Now if you come from like a PM or like a change management world, a program like this is also extremely helpful, because it helps to understand like the domain of blockchain or analytics or RPA like way better. So, I mean, to answer your question, it's not important whether you are from technology or not, because remember, we are not going to make you like a coder at the end of this. You're not going to be able to actually, go create your own blockchain or like a private blockchain and actually, go release it in different environments. But what you will do at the end of this program is you will understand the concept, which means if you need to hold a conversation with some seniors in your organizations, or if you're looking at moving like let's say laterally to different organizations or sectors for that matter, uh, for that this program will be very helpful, because you'll understand like the domain a lot more. Few other questions. You are welcome, Akansha. I have your email ID, so we'll get somebody from our team to reach out to you. Rahul has also asked about the cost of the CBOP program. You've mentioned ICBOP, but it's all on the website, Rahul. So I'll just allow that to go speak for itself. Mm, Neha's got a specific question on blockchain technologies in terms of the implementation in central banks across the world. What is the learning path for new technologies like blockchain, and can we ever expect these technologies getting practically implemented? So again, like over here, Neha, this world is honestly very, very nascent, when it comes to like the blockchain and the implications of what it could do. Today, for example, an insurance claim can be done in about 30 minutes because all the data resides on blocks, and you're able to actually go interconnect it and identify like the data immediately. Um Now, what is the implication, or what is the applicability of this technology in central banks across the world? I may not have an answer for you at this point of time, but I can guarantee you that given what we are seeing in like the blockchain environment, and like what kind of that is growth there is, I wouldn't be surprised if there are way larger implications than what meets the eye today. We have just right now launched this one poll for you guys in terms of just trying to go capture the interest that you've had in like this webinar with us so far. I would like request you all to share your feedback in the poll that you see on your screen right now. We are just trying to go capture like the interest level that you had with us in this. Another question, I'll take another couple of them. Placements from Emarticus are questions that have come in through Rahul and Vijay Jala. So again, as I mentioned earlier, and I have a question from Anubhav about learning data science will be linked to fintech sector and how much does it cost? So Anubhav, data science is important for fintech in particular, because we have quite a few elements of fintech that are linked back to the fundamentals of data science around elements, like visualization, or like clustering, or I mean, how would you actually go segment your data better to understand how would you actually go forecast different things. So data science is a very key integral element of fintech, and as a part of this program we would be covering certain elements of data science and analytics. The course is for 1 lakh rupees, and as I had mentioned even earlier, we have elements of EMI or a easy loan, where you can actually undertake the loan at a very, very low amount of interest. I think net interest is close to 3%, which is 1/5 of I think what you could get outside in the market. Right. We've got some data from you guys on the poll, so I'll close the poll. I think around 70% of you have already voted for it. And there is another poll that I will be launching very soon. Is for those of you who would like somebody from Emarticus to go reach out to you, especially with regards to like the fintech program, because I see quite a few questions here about the program. So if there is anything that you would like us to let you know about, or if you would like us reach out to you for this, I'll be happy to get somebody from our team to reach out to you and give you more clarity on this. I'll request you all to go to the voting screen and just quickly given your options whether you would like somebody from Marticus to reach out to you or not. So I'll go back to the questions which I've got from Rahul and Vijay on placements or job opportunities. So as I mentioned earlier, that this program attracts audiences across the spectrum, but typically we've seen about 10 to 12 years of work experience, which means again that these are not people who are aspiring to get jobs, but these are people who are looking to go reskill themselves in the arena of fintech, and in particular with these kind of technologies across blockchain and analytics and RPA. So this is not a placement guarantee program. We are not going to ensure or assure you any form of internships or jobs or interviews. But I think what this will do very, very categorically is this will give you an very, very like clear edge vis-a-vis the other people in your arena. So if you are looking at moving up, and if you need to go get upskilled on certain elements within blockchain analytics or RPA, for that this is like the right program. I'll take last question coming in from Kalpesh Chauhan, who says AI, ML, Python, and blockchain are the new technologies related to investment banking, portfolio management, etc. Yes, Kalpesh. I don't know if that's a question or more of an observation, but yes, you are on the right path. That I think today Python is like the base that is used across, maybe from trying to create an algorithm for like the secondary markets or the stock markets, all the way to trying to create something for like the insurance, segments as well. So all the way from like the secondary markets in like the capital market sector to like the retail and wholesale banking, as well as to like the financial services side, maybe on like the payments or lending side. I think you have a huge element of how AI, ML, and Python are playing a extremely large role. Right. So on that note, if there are any more questions, I would request you all to go drop it in. I'm going to go drop an email ID uh, in the chat box. Let me give you a common one that we have, which is elearning@emarticus.com. Feel free to go drop in an email to us with any questions that you may have. Maybe with regards to this program on fintech. It also could be otherwise in terms of just in general, if you would like to know more about like the sector or the domain. Feel free to reach out to us on the email ID which I have mentioned, and I'll get somebody from the team to reach out to you. Thank you all for your poll outputs. I think about 80% of you, have voted for this, and 2/3 of you have asked for an Emarticus counselor to reach out to you. So we will reach out to you in the next 1 or 2 days.